Let's talk about the Nasdaq 100. It is very, very close of taking out its all-time high. And for the untrained eye, you might think, well, this is nothing. It's not really a big deal. But from a chart trader perspective, it is a really big deal. And a pattern is currently suggesting we could move all the way up towards 14,000. As well, we have the underlying macro fundamentals that are driving price higher, despite that the index is up significantly from its COVID-19 lows. And that is what we're going to talk about in today's market update. All right, so if you look at this chart, you might say, well, this is nothing really, it's nothing special happening here. But there's something called an ascending triangle. You do get this by drawing a line from a low like this to another low. And then you get it by linking up the resistance levels like this. Now, the way this works is that on a break to the horizontal level, the market should rise. But how much then? Well, if you look at the classic textbooks, you should be taking the low point of the base of the pattern and project that. But I prefer to take something in the middle, because if you grab the base, you rarely hit your targets, but somewhere in the middle usually goes a long way. And this would suggest we can go all the way up to 14,000. Now, are we really gonna go all the way up to that level? It doesn't really matter too much. The fact though that it could gain that much, that is really what's important. So why does it not really matter then? Because what this gives us is it gives us a good level to enter and good level to put stop loss orders as well. So what would I do then? Well, the way this works is that if we trade above the high here, as long as we don't go massively back into the pattern, we're gonna be dealing with a breakout. So if we would have a breakout today, because the index is just up with 52 basis points, then a general idea would be to buy here and put a stop loss just at the low that you can see on this chart. There's obviously different philosophies exactly where you're going to put your stop loss, but this is the most basic one. And then you will go for the target. So you can see here that this is a risk reward ratio of 3.43. So if we risk 1%, we could potentially make a 3.43% return. And this is not a great risk reward ratio right now. It's good, but it's not great. So ideally, what I would like to see, I would actually like to see the Nasdaq 100 trade halfway down of yesterday's gain, so it goes down to maybe 12,217, and then tomorrow hopefully break higher. And if indeed breaks higher tomorrow, then suddenly your risk reward ratio is 5.84. Now what I do is I don't actually hold the position all the way to target. I just go to something more reasonable, maybe 13,200, and then you get still a reasonably good risk reward ratios. If you look for this pattern and look for similar things, and if you look back historically, you can see that many times one was able to put the stop loss and the entry and the take profit in a way to get really, really good risk reward ratios. Because not even at 2.82 is optimal here. If one really wanted to get really close, you could probably just push it below here. But if you push it closer and closer to the price action, then there's a higher risk of being stopped out. Now, the other thing which is quite good here is the macro fundamentals, right? We have Joe Biden, the president-elect, and he has said that he wants to introduce an infrastructure package, and that should stimulate the economy. And the amount of money we're talking about is staggering, about 4.5–5% of US GDP. And that's probably going to be the next impulse that lifts this higher. Already in the past, we had all the central banks and all the stimulus from different governments, but now we have something else coming up. Now, it's not going to be so easy for him. On January 5th, we have the Senate elections in Georgia. And if he needs to grab both seats to be able to sort of spend as much money as he wants, so he might be what we call a lame duck president, which is a president that can't really do too much. I do think, though, he will have some leeway, but obviously even better if he could have control of the House and the Senate in forms of spending. So this is maybe what's happening now. People positioning themselves for him winning those seats. Or it could just be a classic, what we call a Santa Claus rally, or a New Year's end of year rally, which is really, really typical in most stock market indices. Okay, guys, this concludes today's market update. Don't forget to leave a comment. Don't forget to like the video, and don't forget to subscribe. As always, be very, very careful when it comes down to your risk. All trading, at the end, it boils down finding some good high probability setups. And in my case, because I'm using a trend following system, it's all about finding good risk reward ratios and high likelihood of success. Thanks so much for watching, and I'll see you guys very soon. Bye.